If you invest or trade, one thing matters more than anything else: knowing where institutions and algorithms are buying and selling. Without that knowledge, most people will repeat the same mistakes: chasing price, reacting late, missing moves, buying strength and selling fear over and over again, and calling it bad luck or manipulation. The CTKS method pinpoints where institutional buy and sell pressure is most likely to occur before the price moves. This isn't opinion or guesswork. It's a standards-based, battle-tested, scientifically structured framework, the most significant advancement in technical analysis TA in over 270 years. When you know CTKS levels, charts stop being noise, you gain X-ray vision into price, risk becomes controlled, and decision-making becomes objective, calm, and precise. Each video is a lesson on how to apply the CTKS method, practically no cherry-picking and no fluff. If you want a proven, battle-tested edge for trading and investing, grounded in facts, structure, and standards, subscribe, turn on notifications, and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back, CTKS family. Today, in this video, we're going to look through the crypto market to check out the key levels that you really need to know about. The markets are trying to find their footing at the current time, and we can see the VIX is being supported up. Now, what this means, when the VIX comes up, there's going to be negative price momentum inside the major market indexes, and that's going to flow through to crypto if the VIX continues to go up. In the monthly service video, I was noting that junk bonds have tremendous underpinning structural support. Now, this is very, very good for markets. If junk bonds manages to come up, it will pull all the major market indexes up with it. Now, this has a very consequential flow through into the VIX. If junk bonds expands, we would anticipate the VIX will lose its momentum. We have to keep an eye on junk bonds at the current time. It's very important to understand why things occur. When we look at the S&P 500, we saw that it came up into that 69.60 level and it was rejected. And now it's just weakening somewhat. This is forcing the VIX up, but you can also see that junk bonds has been doing quite well. Now, this is the tale of two markets at the current time. The markets have not figured out if they're going up or down. The reason that we look more broadly into the major market indexes and of course bonds and forex and other things aside from crypto is all markets are intercorrelated and interconnected. This blue line here, that's Bitcoin. I'll just make that a little bit stronger so you can see it. Now, what you're seeing here is compared to the S&P 500. The S&P 500 has overhead structural resistance at that 69.60. This level existed before it was hit. It's not drawn in because it hit, it was existing before it was hit. And down here at 68.74, we have that structural support. If you think about it, structural resistance is like a very big roof, and this structural support is the floor. Now, what we hit was literally, we hit the floor, we hit the roof, and we've retraced. This has caused the VIX to go up. We could end up retracing all the way back to 68.74. Now, if we do that, the VIX is going to increase and there will be more negative downside momentum inside the crypto market, which sold off earlier than the stock market. You use Bitcoin to detect weakness or strength in the major market indexes. So for example, the S&P 500 was coming down, down, down. But when it hit that area of structural support, you can see that Bitcoin started to rally. This is why you need to look at Bitcoin even if you're not inside the crypto market. It will give you incredible signals on where the major market indexes would go. Now, a lot of people might say, well, Ken, I don't trade the S&P 500. But if you trade a component of the S&P 500, the component will move directionally like this, just like the alts move directionally with Bitcoin. If you're a gold or investor or trader, you really need to know where the structural levels are. There is a lot of structural support around that 43.09 to the 43.21 mark. Through here, around that 43.85, just a bit north of that, and around where the current price is at the current time. Now, one thing to just bear in mind, when we look at gold and we also look at Bitcoin, so I'm just going to do this. So you can see here, this is Bitcoin and this is gold. Now, gold and Bitcoin are moving directionally together at the current time. Bitcoin is picking up on the fact that the VIX is rising. Gold is so far ignoring the fact that the yields are increasing and the DXY is coming up, but that won't be long-lived. There is a lot of positive momentum inside gold at the current time. Now, let's just get rid of that and let's look at the upward levels. So you can see already, and I'll just push this down a little bit so that you can see this. So inside the crypto market, there was a lot of overhead structural resistance that was playing out. And that means that the institutions and algorithms are going to sell between 46.60 and just up there 47.20. They're going to be high sell zones for the institutional investors and also the algorithms. Now, we could come up pretty fast and a lot of people are going to get really excited with this and probably buy the top. Just as many people inside the crypto market were buying like crazy as it exploded upwards. We'll have a look at that in a minute. And then all of these sellers, all of these algorithmic sells started to trigger and we saw the crypto market come down. Remember, a lot of intermarket correlation is responsible for the moves inside the crypto market. Now, all of the charts that I showed you previously was building your knowledge to understand the crypto market better. Just understanding that different charts impact the crypto market is really important. When we look at total crypto market cap, now remember how I was saying gold has a ton of overhead structural resistance up higher. It could put in a panic gap and then strike all of this overhead structural resistance and follow what happened to the crypto market. Please be aware, if you're a gold investor or trader, if you're understanding where the structural sell levels are, it's like money in the bank. Now, one thing to just bear in mind, the gaps between these levels are panic areas. Now, what happens if we start to lose structure? There is a lot of panic that occurs. We can get underside retests and panic that just flows through the market, but the markets are always moving structurally. It is the way of markets. Now, what does this mean to the crypto market? If we start to see the junk bonds continues up, the VIX starts to come down, the total crypto market cap will just challenge this 3.065 level and start to go towards the 3.1 and back into this zone. If the VIX continues to spike, we would anticipate an underside retest on total crypto market cap and a movement downwards. It is undecided. It's a very early call on which way it will go. Understanding where the market structure is very, very important. I would suggest that it's compulsory, because if you don't know where it is, you don't know where the algorithms and the institutions will sell. For example, total crypto market cap and Bitcoin must be read together. And we had so much structural resistance inside the crypto market. Just think about what gold is likely to come into in the next week. This kind of behavior we could see just follow any appreciation in the gold price. Now, this is almost unbelievable to people. People would look at this and say, no, it can't happen. It's going up and up and up. And social media and retail get so excited when this happens, only to face the consequences of a stack of overhead structural resistance across the crypto market. But what is structure looking like across Bitcoin? Now, these particular levels are called Stanfield levels. They're formed with 2 levels of standard certification. Now, what they represent is the strength of algorithmic buys and sells, depending whether the price is below or above. And we have to read charts together. Now, what we've seen as the entire crypto market cap came into overhead structural resistance, Bitcoin just surpassed 94,500 and then it sold down. Now it's come through a little minor one there, 1, 2, 3 levels, nearly 4 levels. Now we're starting to get a bit of a change in trend, but that unfortunately weakened here. And if the VIX continues to spike up, this will drive crypto down at least to the 89.08 level and potentially below that. But we do have structural underpinning support, quite a few layers, 88,500, 87,880 and stronger at 87,580. Knowing where the structure is your license to print money. Right here, the algorithms are going to come in and buy and support price up. That's why we got this move. And just remember, this is relatively strong structure across total crypto market cap as well. What are the structural levels looking like for Ethereum? We can see that Ethereum came up and then it sold down as total crypto market cap came into all its overhead structural resistance, and that was akin to the 3,300 price on Ethereum, and it's since sold down nearly 10%. So it's important to know where the crypto market structure is, and that is also a gravitational well or a GW, so it can get positively attracted to back if the VIX continues to decline and junk bonds continues to come up. You can see that Ethereum is dependent on intercorrelation and interconnection between charts. So what is the structure for ETH at the current time? What are the levels that we really need to know about? You can see around that 3080 level is a very important level of structure. And there's a lot of algorithmic sells going to hit the market at 3180 and a little bit higher at 3220. So when you know where the algorithms and institutions are going to come in and suppress price, it's not manipulation, it's predestination. Solana has been particularly strong, and you can see that recovery there. It's outstanding. Now, when we look structurally at Solana, one of the things that we notice is that there's a lot of structure from 137 upwards to that 140.87. We're coming into algorithmic selling right here. There's a bit of a panic gap here. So we just expect price to get very volatile in these areas. It can rise up very quickly and it can retrace very quickly. Always just do your risk management. So you're always buying $1 for 90 cents or 80 cents or whatever sounds good to you. We can see that the 130 and 128 level are very good structural support levels. So we would anticipate a bit of a pullback if the VIX continues to climb. But if it doesn't, if the VIX starts to back off, we're going to get further upward progression on Solana. When looking at BNB, the entire crypto market, when it came into overhead structural resistance, we know that all the algorithms and the institutions triggered their sells, and that's what caused this spike down, and this retest up was the gravitational well attraction that I talk about inside the masterclass. Then there were just too many sellers. And of course, a lot of people, when they listen to retail influencers, they think banana zones, it's going to the moon, all of that kind of thing. But unfortunately, it's just going to structure. And when we understand that, it is a game changer. There's a secret code understanding inside every single price chart, and that is structure. When you understand structure, it's an absolute game changer. So what we saw here with BNB, now this is the token for the world's largest crypto trading exchange. It's a very good thing to have in your portfolio. We saw BNB come up to structural overhead resistance around that 922. When it sold off, the entire crypto market was selling off, and it pushed it through multiple levels. When you get panic, this is exactly what happens. 1, 2, 3 levels caught it and then reflected it back. Now, when the market is weakening overall, and we can see that because this is downtrending, this is the first sign of strength at the current time, just this area here. Now, if we get held structurally at this 887.40 level, we would anticipate taking out the 894, pushing to the 903 and then beyond. But just remember, there's a gravitational well across the entirety of the crypto market, which means a bucket load of overhead structural resistance. So it's going to take a little bit of time to get through there. That's something that just you need to put on your radar. Now, if the VIX spikes, what we would anticipate is losing this 8, well, just think about it, 888, losing the 888 level and moving down to the 870. You can take a lot of advantage of these levels, just buying and selling continuously, churning and burning small percentages because they add up to huge amounts overall. I'd like to let the service members know that the January edition is out, so please go and check that one out. It is phenomenal. All the level 1 and level 2 standard certification markups on all the 32 charts have also been released on TradingView. The CTKS method is much more than structural support and resistance levels. It's a theory and a way to live as well. Life is always resetting daily, and this means no matter what your life is going through, you're going through a life pullback, don't worry about it. You're gaining strength for the next life rally. Just think about solutions and don't think about the problems. You are never given anything more than what you can handle. And just remember, today is today, but tomorrow is a completely new day. And with positive excellence, each and every day is better than before. Because when we focus on gratitude and appreciation, we actually manufacture our own happiness. Now, why are we discussing this? Why are we discussing positive excellence in a technical analysis channel? Well, when you become rich and powerful, you certainly want to be happy and you want to have a beautiful life. Positive excellence will give you both. Keeping positive is really, really important. That's why we have the CTKS Creed. Know that the universe wants you to succeed. Every day you can show kindness, integrity, and gratitude because you're not competing against other people, only to be the best version of yourself. Also know that opportunities in life reset daily. You're worthy of every beautiful thing, and you don't have to have it all in the next 5 minutes. You can just go slow to go fast. Start small and scale is the best way to go. Always remember that your life pullbacks are giving you strength for the next life rally. They're not a problem. They're actually an advantage. Just remain dedicated and committed, focusing on winning or learning and never blaming. Don't worry about life and thinking about scarcity. Scarcity always says you need to compete against others because in order for you to go up, somebody else must come down. That is absolutely false. A lot of people apply the way they think into financial markets. They say for one person to win, another person must lose. That is, of course, utterly false as well. Kate and I wish you a beautiful weekend in front of you. And just remember, with gratitude, appreciation, happiness will follow. It's just inevitable. We know that all results come from the mind, and a better mind creates better outcomes. Better habits create a better life. And the CTKS method is here to give you a better life, not just in terms of money, but in terms of everything else, all the good stuff. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.